Hey everybody, this is Jake with TrendSpider going over some of the end of the quarter charts as well as the monthly candles starting to close as well into this week. We have Paul with Trade the Fifth with us, and we are going to go over some charts. I'm going to start off with SPY, QQQ, and XBI, and then we are going to hand it over to him to check out some charts on his end. So to start off with, we have the SPY daily candle here, and what's interesting is we have this support area that was previously broken up here. So we kind of had this wedge breakdown, if you will, and now we're really having trouble breaking through this previous support level, which is now acting as resistance. So one thing that I want to kind of point out about the TrendSpider system is this ability to use the alerts on indicators. So in this case, we have the EMA 50 with an alert below it, and what you can see here is the alert is actually larger than the line. So when the price action goes anywhere within this shaded area, you're going to be alerted. So kind of to start from scratch, if we wanted to go and create an alert on this line, we would essentially pick the triggers. So I'll choose breakthrough, touch, and bounce. And then if we wanted to make the sensitivity more, we could by just going to the right here. So you can kind of determine how much margin of error you want with price action versus where the indicator or trend line is. So let's put it maybe right around here. So we're kind of catching this area right here that was touched before, and we'll have it actually trigger on the 5-minute time frame. So anytime that the 5-minute goes in this area, then we will essentially be alerted when that closes. So we'll just have this expire in 30 days, triggered once, and then the alert is created. So I also have another alert kind of created here, which is essentially the lower indicator setup. So I look at the Williams percent range, the RSI, and the vortex. And so what we can see here is last time, and I'm not saying we're going to have the same big move down like we had in October, but it's interesting to see how this divergence on the vortex indicator has really kind of diverged for a while. Now we're starting to kind of converge here, similar to how we did back in October. And the interesting thing is too, we are kind of right on this trend line. So we've got this trend line here, draw it from here to here. And essentially we had the same thing. We started to break down through the support. This area started to act as resistance, and then we started to break down through the EMA. So if that was kind of the same pattern we followed here, we're kind of breaking down, acting as resistance now, and could possibly be testing this area below if there is some more kind of volume to the downside. With the percent range falling, the RSI falling, and the vortex kind of starting to converge, I have that captured on this SPY potential breakdown alert. So essentially when I click this, I'll be able to see which conditions have become true and which ones have not. In this case, none of my conditions have become true. If I did want to go in and edit this, I can go in and then add more criteria or less criteria. So let's say that I also wanted to be alerted when the daily candle close is less than the EMA 50. I will also be alerted when that occurs too. So we kind of have two alerts on the EMA 50 now. So I save the edits, and now I will be alerted anytime these conditions are met. Now, moving on to Qs, we will kind of see something similar. So, you know, looking kind of bearish here as well, we've got this ascending wedge here, possibly a breakdown coming, and really same thing. We're looking at the EMA 50 below possibly as an area to watch, simply because this is where price action kind of gravitates around. We previously had the EMA 50 as support here on the upside before the October move down. And then when we did break down, the EMA 50 was acting as resistance. And now we've kind of flip-flopped again, broke through, and now this area is acting as support. So naturally, I'm going to just do the same thing, put an alert right on this area below, and kind of right where this previous area touched this shaded area before. So just to make it a little more or a little less sensitive, I'll increase it there. So we will have that trigger on the 5-minute after 30 days have passed, and now that alert is created. And for example, if I want to go in and create the same alert that I have on SPY, I'll just go to the potential breakdown, I'll clone it, and then I can do the same thing here. QQQ. Oops. Breakdown. So then essentially the indicators are the same, kind of the same rules, and then I go here and create the alert. And that's essentially how we'll be able to create that. Now, in this case, if you wanted to do a different time frame, you can always go to create alert, create a multi-factor alert, and create any time frame here by going to expert mode, creating the condition, and then any time frame is going to show up. So you can get pretty robust with this system, and so that's how I'm using it with SPY and QQQ. The last one I'm going to go over is XBI. And XBI is always an interesting one to look at because you can see here, XBI has already touched the EMA 50. So this one is kind of, from my experience and kind of my watching this kind of combination a lot, the XBI ETF is generally hitting the EMA 50 before SPY or QQQ. So definitely something to keep in mind. If we did break out here, I'll just go ahead and create an alert on this trend line, and we can do that kind of more less sensitive. Get that for 5 minutes. Name it just resistance above. And same thing, we can just do it for, let's say, 7 days or triggered twice. So now that alert is in, and we'll kind of be alerted whether the breakdown, the breakdown occurs or the breakout kind of happens to retest this resistance above. And the same thing, if I wanted to go in and re-clone this alert and kind of look for different things, I can do that pretty easily as well. So that is kind of the broad market overview here. I'm thinking regardless of what happens, Friday is going to be an interesting one to watch. And I will pass it back over to Paul to check out the other tickers he's looking at.
Hi, this is Paul from TradersFifth.com, and I'm going to go over those three same tickers, XBI, QQQ, and SPY, that Jake went through using the TrendSpider. Give you my analysis, where I am, and all that sort of thing with those three tickers. And then I'm going to just look at some potential stock trades I'm looking at as well. I'm using our Elliot Wave indicator suite for the Thinkorswim platform. We develop it for quite a lot of broker platforms as well, including NinjaTrader, TradeStation, and Multicharts. Soon MT4 as well. So XBI, Jake just talked about this. I'm in this. I've got 3 holdings. This is in my blend portfolio, if you like. Relatively new addition to the ETS part of my blend portfolio. But these are my entries: 73.13, 88.47, 97.12. So my average holding is 86.24. So we're slightly in profit with this right now. This is the weekly chart. You can see the Elliott Wave count moving up here. I did my original entry was actually 88.47, quite a way back. And then when we pulled back down, we cleared all of this range here. I got another entry at 73.13, and then 97.12. I got caught out a little bit there. We were moving on a daily time frame quite well, but it just ran out of juice and made those all-time highs there. But I'm still in a good position here. On the weekly time frame, you can see we've pulled back quite a long way. Let's go and have a look at that on the daily time frame now, see how that looks, and see where we're going. This is a big resistance zone right now. Taking it from the weekly, and we can see how reactive this price is around about the $90 on XBI, and we've actually formed a range around this price right now. We've got double tops, double bottoms, not really going anywhere. I have no intention in adding any positions to this right now because we've had a nice move up. We've blown through our 5th wave target actually, and then we've gone quite corrective. What we could see right now is coming back below our average holding price and a further pullback, because we've had this from the wave 5, we've had a wave 1, we've had a wave 2, and in theory now, if we push below this pivot point here, we are going to come back down and test this pivot at 78.61 there. So very, very up in the air where this ETF is going to go right now. Pretty much like the markets, we don't, you know, this last week or so leading into the end of the quarter, end of March, been really struggling on the indexes to find a direction. You broke through some really great resistance levels on SPY, but it just doesn't want to go any further. So again, XBI is just representative of that within this particular sector, and it could go either way at the moment. That's why I'm going to stand back, allow my position to be on hold, and then just see if we get that pullback. If we go longer, we're going to be testing this all-time highs up here around about 101.31. But for me, XBI is a hold at the moment. And multiple timeframe .cloud does say now we are going bullish bias. You can see here, this is the daily time frame. We can see at the bottom the 2-day, the daily, the 2-day, 3-day, the 4-day, and the weekly there, all going green. So there is a bit bullish bias to this. And we can see our W5T EMA cloud holding very well on this move, but we're in a critical phase right now, both in this and the market. So let's have a look at SPY. I'm going to go to the weekly on this one initially. So we are already in SPY longer term. This is, it's had a great wave 4 pullback on the weekly SPY, and we entered this coming out of our regression trend channel and through our 6-4 moving average high, the green moving average here. So around just over 267 was our entry on SPY. Longer term move on this one for us. We don't really day trade SPY or the Qs or anything like that. These are longer term plays for us. We have come up and tested this big resistance level now. I mean, look at these weekly wicks and resistance there. We really like to look at linear support and resistance levels when we're trading the 5th wave of the Elliot Wave sequence. So we get the pullback into our probability zones. 85% probability is going to go on and make a new wave 5 high into our automated target zone there. So, you know, the bias is that the probability is that that 5th wave target is going to be moved. We're going to get new all-time highs on SPY. Backing that up, we've got a false breakout stochastic here showing a really strong bullish trend with these yellow dots in the overbought zone. When the stochastic crosses over back against there and then wants to go back, it almost wants to rejoin that main bullish trend. So we are looking reasonably strong. We're just finding difficulty towards the end of this quarter pushing through here, through this big resistance zone. We can see we've got 1, 2, 3, 4, 5, 6 touches on the weekly, and then we've become very range bound over the last 4 or 5 weeks here, which is really struggling. But it doesn't seem to want to go down. We get what I say is we don't get follow through. When we get those down days or down weeks, we don't follow through, which is indicative of where the market is right now. Even in a day, people trading ES futures, it can go. Today went up really well, and then it's pulled back and retraced all those gains in one session. Very unusual towards the end of the quarter here, but we're at these highs. We need to push through. Really, this is good for us. We're in a decent profit making position right now. We're trading this off the weekly time frame, so there's no rush. All we'll do is probably put a trading stop here around about 27180, just below 272, below the low pivot of this big candle here on the weekly. And if it does come back down, to be honest, if it breaks that pivot, we are going to head back down towards this support here around about 260. So we don't want to ride the wave, the pullback. We'll rather get out and look for a breakout. We'll look at it on the daily time frame. I use the daily time frame a lot because that is my a reflection of market sentiment. So when we look at the daily, each candle is an open, a close, a high, and a low. So we put those candles together and we can really see what the trend is doing. And so for me, the truest time frame of all on stocks and SPY and the Qs is the daily time frame. So as we can see, this move on the daily that we've come up here has really hit the wave 3 on our daily time frame. We've got a strong bullish movement with our multiple time frame dot cloud at the bottom here, all green. We've got the false breakout on the top there on the stochastic, denoting a really strong bullish trend. Now, what we have printed already with our software is this pullback zone. So these pullback zones represent 85 in the green, amber is 80, red is 75% probability. Look where that red zone sits, right at this support level. So in theory now, we're really struggling. We're running out of juice coming up to this level. If this juice really runs out and starts to pull back and comes back through the pivot I just talked about there, just below 272, we'll see a wave 4 pullback. Or probably, you know, try and coming back to here. This is when we use our multiple time frame strategy here. So we've gone on the 5th wave and we're long on the weekly time frame. We've now got a trading stop in just to protect those profits. Now, if it does break that, take the profits out. We then go down to the daily, wait for that wave 4 to form, look for support, and then look for another long on SPY or whatever we're trading. But this is the strategy with SPY we've got at the moment. If it continues to go, brilliant, we're in it anyway. If it comes back on a wave 4 on the daily, we will take our profits, wait for the wave 4 to find support, and look for it to have another go long. Okay, so that's SPY. Let's go back to the weekly and go to Qs. Qs, similar sort of picture on the weekly, but this seems a little bit stronger to me. We have got a 5th wave move. We were quite aggressive. So what I've done here is if I always like to draw channels and frame the trend, if you like. So this is framing the trend on the weekly time frame a long time away. So one thing that channels, and I teach this in my core trading strategy on TradingFifth.com, is we are looking for the touches on the top and on the bottom, but a lot of this is about how the price action revolves around the center line of the channel there. That's a true identity of where we are in that channel. And as we can see here, on the weekly on the Qs, we did have that wave 4 pullback come into our probability zone there. Fantastic. Didn't quite test the lower bound of the channel there. And then we used the center line of our channel and our 6-4 moving average high as our entry. So just above 167 was our entry there on the Qs. We are in a good profit making position now. We've pushed through a resistance zone that we've got right here. You can see this on the left here. You can see these wicks touching on the right, and then the lower bound takes in this support level. This is a really strong level, centering around about 174.50. So again, sensible for us would be to put our trading stop below this support level, just below $173. If it comes back against us, we're taking out a profit and we can look for further trades. But again, we're looking for 200 on the Qs. We're looking for those all-time highs. This is our all-time highs at the moment. Remember, the 5th wave move is the highest probability move in an Elliot Wave sequence, and we are well on our way. We might run out of juice, so we need to protect profits. We go and look at this on the daily time frame. Exactly the same sort of picture as SPY. We are very strong bullish. We've had a wave 3. We've actually come through, let me just get rid of this. We've actually come through this resistance level, which could act as support now. You can see our EMA cloud's been touched here in our probability zone. It's gone on and made those new highs. And then we've got this week where we've with low volume, we've got a black box breakout indicator. And part of that is you'll see these cyan candles here. These are down candles with low volume. The grey candles are up candles with low volume. So when we get the green candles, for example, these are increased volume each day. So these are accumulation candles as far as volume is concerned. But you can see here, we've had the big down day Friday, but since then we've been gapping on low volume. Yesterday we had increased volume to the downside, but that's not been followed through. And again, when I talked about XBI earlier, these markets, the Qs, the SPYs, the stocks in general, are not following through on a move up or down this last week or so. Maybe it's because we're going into the end of the quarter. A lot of institutional traders are closing the quarter off, looking about their bonuses and everything like that. And that sort of thing really does stifle the market sometimes when it's been a tough quarter trading. You know, they'll be closing positions. They won't want to be looking to go long. They'll be taking part positions off, so they won't start that stampede down and the sell-off. So this is the area where we've got now. So with the Qs, again, we're going to have a tighter trading stop just underneath this support zone, just underneath, you know, about 172.97. Because if that breaks this support zone here, we're probably going to come down and test the center line of our weekly channel into our probability zones, and then we'll look for a fifth wave move. Okay, so that's the SPY, the Qs, and XBI. Just want to touch on a couple of stocks, really, that I'm looking at the moment. The first one, I'm looking at a lot, but RTN is the first one. Defense sector had a pullback recently. Really, really interesting, looking for another long. So remember, we just looked at the SPY and the Qs. We see we got the big wave 3 long there. Now we've had the wave 4 pullback, and look how the price action is really holding into our W5T EMA cloud here. We've gone range bound in this. We are looking for a breakout and a fifth wave move. You know, my entry on RTN is above all of these dojis here, 183.20 for a fifth wave move. Stop loss is always just below the wave 4 there. But our EMA cloud is really holding support at the moment. We've got 535s pullback between 90 and 140%, which is a great indicator as part of our indicator suite there that the wave force behaved pretty good. We've got the stochastic with a false breakout. We've pulled back against there. So everything's teeing up there. We just need some bullish markets for this to pop out of this range. Target, I would say our automated target zone there is around about 192. So we're about 1 to 1.5 risk to reward on that swing trade on a daily time frame. Once it breaks, it could take maybe, you know, 15, 20 days to reach there, depending on how bullish the markets are and the sort of momentum we're going. The next one I wanted to look at was ENTG. Very similar sort of setup there. With that wave 4 pullback, we are there or thereabouts. So again, we look at the performance of the wave 4 pullback here. It's coming to our green zone. It's found support in our linear support zone, which is the green zone here, but also in our EMA cloud as well. So that coincidence of an exponential move in average cloud and the linear acting as support is really strong. We look at the performance of the wave 4. Part of our indicator suite are these extra tools, if you like, to look at the performance. 535 is good, stochastic's good, it's pulled back against the false breakout bar, crossed over. Again, simple, repeatable strategy. You just need to just repeat it all the time. Sensible entry strategy here to our automated target zone gives us up to $42, a really great risk to reward there. We just need that breakout through 36.47. So those are a couple of stocks I'm looking at on the daily time frame. I did want to also point out that earnings plays a big part in trading the fifth wave, or any trading in reality. And this is a trade that we're in right now. This is Ollie. So we had the earnings reaction here. It was not bad, okay? We had the slight lift, but we didn't get the follow through on the day of earnings. Now, so then we put the order on for a potential fifth wave move. We looked at the performance of the wave 4, stochastic pulled back against the false bar. The 535 showing that we know the 535's crowned between 90 and 140. Really good sign, that wave 4. Now, we went quite deep here. We hung on to that red zone like you wouldn't believe for over a week there. Before earnings went flat, we got the earnings boost. And then yesterday, we put the order on 83.14, and we had this big bullish engulfing candle there. Good reaction to earnings. Now, we had a great day today so far. We got the higher high, higher low, but the markets, as I talked about earlier, ES pulled back from the highs and retraced everything that it gained early on in the markets. We do seem to be holding above yesterday's close right now, so we could see a resurgence in this And this is the sort of trade that you're looking for those earnings reactions. If you've had a good move since previous earnings, for example, let's have a look where the previous earnings were. We had the gap down, we found the support, and then we had the good move. When we've had profit taken against there and we go flat before earnings, it's a good earnings, we get a good reaction, and we've set up for our fifth wave move. Great looking trade. And then finally, I want to look at Apple, but this time on an intraday time frame. Apple, I'm in Apple, got big, let me see, just looking on the chart on the screen now, just tell you my entries on Apple briefly. So my entries for Apple are 150, just over 150. We got a 165 and a 171. We're at 188 now, so big profit in Apple in my blend portfolio. But also I like to trade this intraday when we get some movement. So right now, Apple has had a big move up recently. This is a 60-minute time frame. So we've had a really great big move up. We've had these current intraday highs, and then we've pulled back on the wave 4. Not only has it found support in our amber zone, also this support zone here from the daily time frame that comes from the chart is there as well. And the upper bound of our daily channel that we broke out of, in theory, is acting as support. So we've got a good potential intraday long on Apple next week. Don't trade Friday, so I'm not going to, this is Thursday when we're recording this. I won't be trading this Friday, but I will be looking for that fifth wave move with a target of $202 in mind on Apple. Intraday though, you probably have to be prepared to swing this, I would say, up to 7 to 10 trading days if we don't get the momentum. But good looking trades there, potentially for those fifth wave moves. So, that's it from me. Jake, do you want to add anything?
Everything looks good on your end. I think we're really seeing the same thing on this pullback, possibly to the shaded area on your charts, which is, I guess, is that a EMA or the
yeah, this is our W5T EMA cloud.
Got it. Yeah, no, so that's it's really interesting to kind of see the upside and the downside possibilities with that thing. So that's really cool to see. And from my end, I think I wanted to say everything I had to say. It will definitely be interesting to see where the weekly candle closes on Friday. That may set the mood into April. So April Fool's on Monday, so who knows what the market will bring us. But definitely looking forward to it, and looking forward to doing another video like this soon with you.
Yeah, thank you very much, Jake, and I'll speak to you soon.
Great. Thanks, Paul.